Alright, welcome back. So today I wanted to touch on daily profiles again and the kill zones that we are going to be using in indices. So previous episode was about Forex kill zones. Now we are going to be touching on kill zones for the indices. So I'm mainly going to be touching on NASDAQ, ES and YM. That is NASDAQ, of course. That is NQ, the futures contract. Then we have ES, which is the futures contract for the E-mini S&P 500. And then we have YM, which is the Dow or US 30. So first, let's get the times right. Asia and London are the exact same as in Forex, but today I mainly want to go over London, New York AM session, and then New York PM session. So London is the same from 2 till 5 AM, New York Eastern time, always New York local time. Then we have New York AM session. New York AM session starts at 8:30 AM and ends at 11 AM. In your New York AM session, you have equities open at 9:30 AM. From 9:30 AM until 10:30 AM, you have opening range. And then at 1:30 PM until 4 PM, you have New York PM session. Then from 3 to 4 PM, that is called the closing hour. Every single one of these sessions, every single thing that I just mentioned has certain characteristics, and that is exactly what we are going to go over. Remember that these certain characteristics are all probabilities and that they are all a general rule of thumb. We still have to react to what the market is giving us, and from there we have something to work with. So let's dive into it. First, of course, what are we aiming for right here? We just saw a huge move up right there. Right there, I see an order block. Now, the reason right here why I'm not including this wick and I'm ignoring it is usually when there's a huge wick right there, it is mainly because of news and I tend to ignore it completely. So then I would just take this order block and ignoring the wick right there. All right, if we know we can potentially trade into that order block because we just swept some lows, discount array to now a premium array right there. If we drop into the 15-minute, again, I'm using the same FX market sessions right there for my indicator. The first thing you will notice right here is probably that the AM session and the PM session are very volatile. So indices are mainly very volatile in New York and not as volatile in London. If you want to trade some kind of indices during London, I would advise to trade DAX. That is what I trade for a long time. I've traded indices for a very long time. For my London, I would focus on DAX, and for New York session, I would mainly focus on ES. So right here, we are on NASDAQ, and that's the same exact thing. Main volatility of this day is in New York. So London almost acts as a sort of Asian range that we just saw in Forex kill zones. London is generally not something you want to trade when you are trading indices. You want to focus on AM and PM sessions. So London, consolidation, AM, expansion, and PM, somewhat of an expansion, but less of an expansion than AM right there. Coming into that 4-hour order block that we just saw. The general rule of thumb, and this repeats every day, is consolidation, expansion, consolidation. Or expansion, consolidation, expansion. That is indicating if London is a consolidation, AM usually is an expansion. Then afterwards, PM is usually also a consolidation, the same as London. So it switches around every time. If London is a big expansion, and we'll have an example of that just in a few moments, then AM is likely some form of consolidation. If AM is some form of consolidation, then PM session is likely an expansion again. So we are constantly moving from consolidation, expansion, consolidation, expansion, consolidation, expansion every single time. So if we zoom in a bit here, we have London consolidation if we dive into the 5-minute. Now, the thing I want you to understand, the difference between Forex and indices. Indices is a real liquidity hunter. Forex as well, of course, it is all based around liquidity. But if you're looking to trade liquidity pools, for example, turtle soups, and you would look for a lower time frame entry right there, indices are the way to go. Indices love taking liquidity and then running. That's what you'll see a lot of times. So what we see here is London consolidation, AM sweep of London. Then at 9:30 we have equities open right there. 9:30 until 10:30, that is your opening range. The opening range usually makes the high or low of the day, because that is where the most volatility is. There's a lot of volatility coming into the market at 9:30 because it is equities open. So ideally you want to get involved after equities open. Now the thing is, what you'll see sometimes is when at 8:30 we are already coming into a higher time frame premium or discount array. And 8:30 already expands. Then 9:30 will likely only be a retracement of what 8:30 created. It will continue higher or lower. That's exactly the same scenario as that we saw on the previous episode, with Asia already expanding, London being a retracement of that, and then continuing. Right here we have a liquidity sweep. We're making the low of the day right there. We are expanding higher. We have some form of retracement right there. Then again, we are expanding higher. The middle in between the AM session and the PM session, what you'll usually see is another liquidity sweep. Right here, another liquidity sweep before we start running again. Now, why is the PM session again an expansion? Because I just mentioned consolidation, expansion, consolidation. It is because the PM session has not yet reached the target. Where was the target? The target was the 4-hour order block right there. So you'll see PM session is still expanding. So in that case, if you're still looking for trades right here, maybe off of that fair value gap right there, that is a perfectly fine trade still in PM session, as long as you keep the target right there in mind. And for the PM session, can you notice where a lot of the volatility comes into the market? Closing hour. Closing hour, or sometimes referred to power hour, from 3 p.m. until 4 p.m. That is your bonds closing hour. Right there you have a lot of volatility coming into the market because price needs to get to that objective quick for that day. It still has 1 hour to do something. It needs to do it quick right now. So that is where also a lot of volatility comes into the market. So indices are very great if you want to be a scalper, because you have a lot of volatility coming into the market at certain times of the day. If you were to trade the 1 minute, for example, I would prefer trading the 1M on the indices instead of trading 1M on Forex. Because if we drop down into the 1 minute, what did we just see? We saw a London sweep right there. And right there, we have an entry right there. And if we look at the PM session, the 5-minute fair value gap we just saw, right there is also an entry. Both based off of the ST model that I'm teaching inside the mentorship. So if you truly want to be a scalper, I would advise to trade indices instead of Forex. So here we are on ES. Again, important to understand, NASDAQ, ES, YM have all the same characteristics. Of course, in between them, there might be very small characteristics that differ a little bit, but overall they have the same characteristics on the kill zones. So right here, what do we see? We see London expanding right there. And this is important. Before 8:30 or around 8:30 right there, we took these lows right there. That indicates that a low resistance liquidity run has already happened right there. In other words, we already had a run on liquidity right there before coming into the AM session. So what you'll see right there is at 9:30 equities open, and the opening range will likely be a consolidation. Some form of consolidation right there. The reason being is because London, and before 8:30, so before AM session started, we already achieved the objective. The mission was already complete. So AM session is consolidating right there to generate new liquidity. And what you'll generally see is that PM session will be an expansion and will be more volatile. And that is exactly what we got right there. How can we explain this in terms of the kill zones we just explained? London expansion, AM consolidation again, PM expansion. But again, like I said in the beginning as well, these characteristics are a general rule of thumb. Here, how can we, in terms of the A to Z guide as well and the structure we apply, how can we view this? Intermediate term low got taken. After that intermediate term low got taken at the right session right there, this session could have also been a PM session, and then I would have expected that PM session to consolidate. Some type of consolidation, a bigger retracement into the intermediate term range premium right there. And then we continue lower. See how all these concepts are working in harmony. The kill zones, the structure, everything is working in harmony. So that intermediate term low was our objective. So once that gets taken before we have the most volatile session, normally the AM session, then that could be a consolidation. And then the PM session, if this is a consolidation, the PM session, we know almost for certain it will have more movement than the AM session. So consistently, I am giving you if then. If we've reached the objective before 8:30, likely consolidation. If consolidation, then PM session expansion. There's constantly an if and then. There's constantly an algorithmic factor. There's a mechanical guideline. That is exactly why I always call it a step-by-step guide. If you're paying attention and taking notes, and I know most of you are, then it's no surprise that you're now seeing it is constantly in every episode. There's an if and then, if and then, if and then, consistently. You could make a song of it. So on NASDAQ, we had consolidation, expansion, consolidation. Here on ES, we had expansion, consolidation, expansion. Now, can you notice one last thing that I'm trying to tell here? These hours, the equities open, the closing hour, every single thing has certain characteristics as a general rule of thumb. But based on liquidity, look how fractal this is. Look how fractal. We expect a lot of volatility to come into the market at closing hour, right? Because closing hour, you can see it as a take profit. Closing hour wants to take profit. Bonds are closing, so it wants to take that profit right there. Sort of as a London close. So what do we see? We take this intermediate term low, this consolidates. Then we have a new intermediate term low right there. We retrace, creating a new protected high potentially if we now take out that new intermediate term low based on the structure video that we went over. Right here at closing hour where a lot of volatility comes into the market. Why did this consolidate? This before closing hour, we already took that intermediate term low right there. So now the objective, the same as the AM session consolidation, the objective is already complete. You can apply this to every session. See how fractal the market here is. And can you now see also the AM session consolidated, the PM session swept liquidity right there at equilibrium, at premium of that range. There could be an entry because in the PM session, like I just mentioned on NASDAQ as well, AM session, PM session, indices in general, they want to hunt liquidity first and then they take off. So right there on the 1 minute, what do we see? We have an exact 1 minute entry right there. And again, reminder, the reason I'm going into 1M on the indices is because the 1M on indices is way more doable to navigate than on Forex. If you want to trade the 1M and if you want to be a scalper, indices are your go-to instruments. And that is what I have traded for a very long time. So right here, if you just apply the float and the lot concepts, there's a very easy entry right there, right? You have this entry right there. And then you also have that entry right there. Now let's look at one more example. All right, here we are on the daily on ES. Let's dive into this price action on the 15 minute. So if we drop down into the 15 minute, we were coming off of a daily fair value gap there as well. Now, what do we see here? Right here, we have a London consolidation right there. And then it is very important to understand once you start trading the indices that at the AM session, if you want to be an AM session trader, AM session first has a fake move and then the real move starts. That is what happens a lot of the time. So don't get faked by this fake move. How would you not get faked by this fake move? By understanding the higher time frame. We were inside a daily fair value gap, aka a discount. So price will seek a premium. In what form? We have an order block right there on the 4 hour with, most importantly, this fair value gap on the 4 hour. So if we drop back down into the 15 minute right here, we see AM session creates that low of the day in the opening range, continues higher right there, sweeping again, liquidity, a real liquidity hunter. Now, if you go into the lower time frame yourself right here, that would be a great study. Go into the lower time frame right there and study how you could have gotten involved based off of the float, the lot, all the stuff that has been taught to this day. This is Thursday, 1st of June on the ES continuous contract. Then what do we see? AM expense, and then in between here, we already reach that premium array. So we have already reached a target for that day. So what happens? PM session right there somewhat consolidates, but the most important to understand, it doesn't expand higher right there. It consolidates and somewhat is in between. If this was a candle, it would have been a doji candle, where you just have one small body and you have two long wicks on both sides. It is somewhat of a consolidation and you see a huge move down at the closing hour right there. The volatility is there. So right here, if you do want to look at anything, you would rather prefer shorts over longs because we've already reached that target. That is important to understand. So again, there is an if-then statement. If PM session has already reached this and that, then do this. Same for your AM session. If AM session has already done this, done that, then do this consistently. And you can see again, consolidation, expansion, huge expansion, consolidation. Then the next day, what do we see again? London, consolidation right there. A big down move first, and then we expand higher. Here you can see the difference. 8:30 already had a big expansion up. So when that happens, 9:30 will still give that fake move down, but it likely won't take out what 8:30 already established. And then what do we see after PM session? Consolidation right there. Consolidation, expansion, consolidation. Or what also happens sometimes, expansion, consolidation, expansion. And that is also what we've talked about. So go study this, see how it applies to the market. And as well, remember, if you're a Forex trader or an indices trader, both Forex skill zones and indices skill zones are important because the characteristics of these skill zones and these sessions, they are very important to acknowledge. And that is how we get the most potential out of you. All right, perfect. Thank you.